Oh boy, oh boy, oh boy. It's getting interesting for the start of the week with the weekly gap down. All eyes on this specific week are going to be focused on Jay Powell and the 10-year yield. Welcome to the Daily Stock Market Brief. My name is Michael Silva. This is the show that I do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Okay, we look at 4 asset classes. We look at the stocks, indices, right? We also look at some indicators. We look at commodities, the dollar, and bonds and yields. All right, so today we got a little bit to talk about. We're going to kind of map out kind of where we are after today's little, whatever you want to call that, episode that the market had, you know, going into an important day tomorrow and the next. So let's just go ahead and get into today's show. All right, welcome back. We're going to start off with the indices and then work our way through. All the timestamps are in the description. Hit that like button because it's appreciated. It helps get this show out to more peeps. We're going to start with the WILSHIRE because I've already did that on the previous video, and I just want to show you the follow-through that we had today. You can see that bearish crossover still way above the yearly open. This was the yearly open. Well, technically it opened up right here. We came back, we back tested and found some support at that level. So still bullish context overall, but not the greatest start to the week. You can just see one massive red candle to the downside. If you're wondering what the WILSHIRE 5000 Composite Index, it's a very broad market index. It gives us good insight as to what the market is doing. S&P 500, another important one. Gap down, came back to retest, did not recapture the 3,900 and fell to the low and closed pretty much at the low of the day. Price percent oscillator did flip over. Keep in mind, bullish context still, right, folks? So yeah, we talked about as soon as it hit this upper channel, it's either going to consolidate or pull back or break out, but it didn't break out. You can see it just kind of held and went a little, grinded a little bit higher, and now we're starting to see it roll over a little bit. Maybe we come back to test this area, but it really depends on what goes on these next 2 days to see, you know, how the market interprets what Jay Powell has to say going forward. 30-minute time frame. If you don't follow me on Twitter, you can follow me on Twitter. I called it right down here in this range. I was saying that, you know, it was coming into the 200 period moving average. It closed at one of the gaps, and it seemed like it was a good opportunity to buy into it for a bounce. And then it came right up to the pink box. That's exactly where the target was that I posted on Twitter, and it came over there and then it rolled itself over. So if you caught that little bounce trade, awesome. I was also looking down here at the VIX on the 30-minute time frame. You can see it came and hit the pink box, that target, and then found support from that area and then headed up. So congratulations to whoever got to capture that little move. Dow Jones still moving sideways here. Dow Jones had an up day. Price percent oscillator still above zero, but it does look like it wants to have a little bit of a bearish crossover here soon. But, you know, we're still holding right around 31,500. And it's in bullish context. The green line's moving up. That's the 20 period, the 50 period, the 200 period. And then we have the yearly open right here. Where is that at? It's like 30,600, right around that range right there. I don't have the exact number in front of me, but we're still bullish context. Everything's looking good and healthy, so no need to really panic right now until we start really seeing some big moves. Preferably, like if we did see something, we'd want to see something dramatic take place like last year, and or something like this where we saw these big red days and then we saw that big gap down. Keep in mind, we will be mapping out levels of support going forward. Keep an eye on the 50 period and keep an eye on the yearly open, because that to me is still an area of support that a lot of eyes are going to be on. Then I want to look at this on the 30-minute time frame. We mapped out these levels quite some time ago, I don't know, maybe February 16th or February 17th, right around that range. Look at how just beautifully it's been hitting and ping-ponging around this channel. All right, little caterpillars floating around here. Right? It came down to 13, so 313. This is the DIA, the ETF for the Dow Jones. It was resistance, then it acted as support, 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 and it's also been acting as resistance at 316.50. Boom, boom, and boom. Gap down today, immediately hit our support level and went straight up for the entire day, then reverted back down to the downside, but we did close above the 50 period and the 200. So this looks like if we break out of one of these levels, it could flip into an area of support and or resistance. Once support is broken, then becomes resistance. Once resistance is broken, then becomes a level of support. Let's look at the Russell 2000, still in bullish context. Not the greatest looking price action today, right? We gapped up, moved higher, and then 225 held as a level of resistance there, but we're still within the channel. Technically speaking, everything's fine here still at this particular point on the daily time frame. Price percent oscillator is a bearish crossover. Negative divergence is kind of playing out right here. You can see. And the price action is still above the 20, the 50, and the 200 moving average. So think of these as little rivers floating up, right? That's the trend. I like to look at these because it's an easy way to spot a trend. And when you have them stacked like this and a nice spread between them all, it just shows that it's a more powerful move thrusting forward. And you can see that in the price action there as well. Let's look at the NASDAQ. I also called this one out on Twitter. Now, there's a couple things. We broke down through this channel. We closed well below the 20-period moving average. You could draw this channel out a little bit differently to make it look like it didn't break down. Okay, I didn't do that, but I wanted to just call that out. Maybe if I would have connected this line here, then it would have ended up here and here, so that'd be 3 points. So yeah, I can see that as an option. So let's see how it plays out tomorrow. 50-period moving average can act as an area of support right there around 320. Clearly, there's some other data points around that area too. You know, NASDAQ, tech, has been doing good when we're seeing this 10-year yield kind of shoot up higher and higher. So maybe if we can rein in the 10-year a little bit, this would make for a good hedge long position where you'd want to be buying those specific dips. So we'll keep a close eye. Keep in mind still, even though this is a pretty aggressive down day, the trend is still up, okay? 20, 50, 200, good spread. RSI did get below 50 and it has acted as support around 50. So this could be the start of something bigger, but it's too early to tell, unfortunately. So you need to prepare if it's something bigger, okay? So you got to map out key levels. The first level I'd be looking at is around 320 or 318.66 as a level of support. The 50-period moving average has acted as support, and there's other data points that suggest that can act as a area of support. Then you'd have a stop loss below it. If it continues to fall, we'd be looking at even lower, I'd say around 300, and then if it gets even crazier, we can start looking at the 200, but it's not going to do that in one single day, most likely. We'll have to see and play it by day to map out new key levels. Now, if you watch me on Twitter, I called out right around this level. I said this looks like an area for a bounce too, and it bounced up, and then right at these two candles right here at the top, this little hammer candle, and this red candle was just below it. Then I said, okay, this now looks like a good area to take profits if you didn't already take the profits or scale out of the position, because you want to watch out for what's called a dead cat bounce. Okay, we gapped down, boom, we moved up. That was the dead cat bounce. Then now I want to call out a couple other things. This is also still a good opportunity to potentially go long on the 30-minute time frame if you're a trader. But you got to be careful for a couple of things. One, the positive divergence right here so far is building. So you have a low here, a lower low here, a low here, and a higher low. The higher low right here on this says that there's strength coming in even though the move is moving down. The only thing that scares me is if you look at the VXN down here, this is the volatility index for the NASDAQ, it's breaking above that 31 range, what was clearly resistance with a little head and shoulders pattern. So if that plays out, I brought out a bigger chart to show you, okay, if it starts breaking out, which it looks like it is, we can easily target this gap to fill. Now, if that fills somewhere around, 33 to, or this is just pink box, let's call it, that would be a potentially better area to start buying into the Qs as a leveraged long position, or not leveraged, sorry, a hedged long position, or if you use leverage, you can use leverage too, I guess. That's up to you. But if it does reach up there, the RSI would be in that overbought territory. So my eyes are actually focused on this as a move going into the remainder of the week. I don't know what's going to come from the whole Jay Powell thing, but we will see inverse head and shoulders breaking out of this area. If it does reach up here, clearly gaps act as a level of support and resistance. So, the higher this goes, the lower the Qs go. So the Qs could go technically lower. NASDAQ 100, NASDAQ, they could go lower, okay? But if we start running into some area of resistance, it might turn back around, and that would be an opportunity to get in some profits right there. So I'm keeping an eye on this one going into the next couple of days. Let's look at some stock market indicators. The VIX, I redrew out just an area that I thought was important, this 25 level. Clearly, there's a lot of pivot points. So, bam, support, acted as resistance, but then finally broke out. And then when it broke out, it did so with some thrust. Support all throughout here, support, and then bounced up higher. Then it kind of went sideways, resistance, support and resistance again right here. So clearly 25 is one of those levels that when we get above it decisively, we can see some pretty aggressive moves. We're not above it right now, but the little cupping here taking place on the RSI could suggest a higher spike up. So we got to be mindful of that. If it does start spiking up, we'd start looking at 30 to 37 as a potential area to start going long again on the S&P 500. Right now, we got to just play it very carefully. It's been trading within this channel for quite some time. Volatility is still relatively high, and we have a lot of things going on. So you got to, proceed with caution in this current environment. 20 period moving averages in the middle of the Bollinger Bands, and that acted as a level of resistance too. So it's kind of confluence area of resistance. So if we get above it, we might get a squeeze higher there. And if that is the case, then I would expect to see the S&P 500 start pulling back, and we can start mapping out some more levels there at that specific point. The CPC, this is the total put to call ratio, good sentiment indicator. Despite the down day, it looks like people are buying some options to buy this dip, because it just spiked down lower, even though despite we're having a down day. So people are not scared. Still the euphoria is out there. Still people are buying these dips. Still people are max long right here. So we got to be mindful of that. It could be... I can tell you one thing, this can turn, and when it turns, it could turn very quickly. Okay, we're keeping an eye on 0.8 right here. If the 10-period moving average moves above 0.8, that is the quote-unquote sell signal, and we got to be very careful. If you don't know what I mean by sell signal, that doesn't mean sell everything. It means to make sure that you take in some profits if you're in the green, or stick to whatever your trading strategy is, but it doesn't mean go lever up one-sided and buy a bunch of puts. Okay, that's never the case. You can get lucky, by the way, doing that. So I'm not saying that can't be a winning way, but it's just more risky. So we got the NIMO here. This is a good breadth indicator. Breadth was down today. It was a down day, but it wasn't no crazy overextension to the downside. So that says to me, okay, there actually could be a possibility for more room to fall here. Okay, we didn't get in minus 60 overextension where I'd feel confident going long. This is just kind of just sitting around in this little reading over here. Not overextended to the downside, but yet still negative divergence and still negative breadth. Then we got the percent of stocks above the 200 period moving average. Okay, it's been such a high grind above this level. Finally, we're seeing it drop into the mid 80s, which is still relatively high, but it hasn't been there since November of last year. Right? So mid-November of last year. And, it's been a long time just grinding at these key levels. So the market right here, if it continues to move down, typically when it reaches these levels, it's quick spikes to the upside, then it comes back down, then it goes back up, and then it comes back down. But it has just been a constant grind. And you can see here, negative divergence. We called that out in yesterday's video, a couple other ones. And it moves up higher here, lower high here, higher here, lower high here. And now we're starting to see it kind of roll over here. We gotta just keep our eye on some key levels going forward on the S&P 500. Now the BPNDX, this is another thing that I want to really kind of make sure you're paying attention to. So focus. Okay, what did we talk about on the Qs, the NASDAQ? Okay, I'm gonna wrap it in. Okay, it's all about finding more ideals in our favor. So for example, if this continues to move up, right? This is the VXN on the 30 time frame. We come to fill this gap at that particular point in time. If you pay attention to the BPNDX, that could push us into an oversold territory, potentially even creating a positive divergence. Potentially. So that would look like a low here and a higher low, just like a low here and a higher low. But we'd have to see on this chart a low and a higher low. So if we can get this reading below 45 and the RSI comes down into oversold territory, that to me would be an opportunity, and I feel very confident going along the Qs and or finding something within the NASDAQ 100, whatever, to continue to trade or hedge long with. All right, does that make sense? I hope it does, because that right there is a golden nugget if we see it take place. Now, another thing that I want to, because I don't make recommendations, I'm just telling you my opinions. It could also go into a positive divergence and it could look good. But remember, things can break down completely when they're also oversold. Okay, that's when a lot of breakdowns actually take place, just like complete breakouts take place even when we're overbought sometimes. It can stay overbought for a long time, and the RSI can stay oversold for a long time. So we got to be mindful of that. Don't just throw caution to the wind just because of, you see a couple ideals in your favor. You can feel more confident about the trade, but you still need to look at position size, and you still need to manage risk. Okay, you can't get off the hook for those two things. And then we got the BP SPX, just fell below 50 here, still has room to go, but we can also keep this in mind as far as if it does come down into that oversold territory like it did here, we call that out, we saw the move higher, so we can feel confident hedging long when we see all these different things kind of come together. So commodities have just been rampant running, just moving through the roof. Gold had a good day today, up $31, 1.74%. Yeah, it was like a 3-bar breakout too. So this was coming into support. We found support, moving up higher. But keep in mind, this could just be temporary. It could be just temporary. It could be good. Now, what's interesting to me is the yields went up, and they've been spiking up. Now we're starting to see gold, move up. So it's this weird back and forth between, okay, it's like really correlated with the 10-year. Now the 10-year is running into resistance. We talked about that in yesterday's video, and the dollar really tanked today. It was a pretty solid day down, and that we really saw some strength come in to gold and also the miners as well. If you didn't watch SIL and SILJ today, though, I posted those charts on Twitter. I should have brought them here, but I didn't. I forgot. Those look really good. I'm watching the price percent oscillator, still bearish, under 0, and it's trending down. Mine looks like I want to try to cross over, but keep in mind, we're below the 50, we're below the 200 on the daily time frame. The weekly time frame looks a lot better than this, but we're only looking at the daily right now. Silver, also big day, up 83 cents, 3%. Bullish crossover. Okay, it's been going flat, but maybe this is the start of a bigger move. If you look at all these days right here, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days, maybe you can even count these two, 9, 10, 11, 12 or 13 days, or whatever the case. That is a breakout of a pretty long portion consolidation. This could be temporary, but the support here is clearly holding 1, 2, 3, 4, 5, and now we're breaking out of this. Hey, this could really send us higher. Keep in mind there's resistance right here, and we've gotten hung up here a few times, so has a lot of work to do still, but it's showing signs of strength right now, okay? So it's showing signs of strength right now. We got to keep an eye on the trend, keep an eye on the support, and also silver chart on the daily looks significantly better than gold right now. So the silver miners I'd be keeping a closer eye on than like the gold miners, although gold miners can't, there's silver miners take base metals, they do silver. I mean, sometimes they land gold. Gold miners sometimes get base metals, right? Or they do, and then they also sometimes get silver as well. So you got to, do your research on what companies you want to invest in. I think the bigger ones obviously is Barrick, ticker symbol GOLD, and then we have Newmont Mining. But there's other couple of huge players obviously there too as well. I like Helka Mining, HL. I'm not investing in them anymore, but I did catch a massive run up earlier this year with them, so that was nice, and last year. So pretty happy about that. I will be continually moving into miners here as time progresses as well. Just waiting to build my position up again. Now let's look at Bitcoin. I'm bringing that back. Bitcoin, this little trend right here has been acting as support. So 1, 2, 3, 4 touches. You can see the big nasty red down day around 47,500, but it's still clearly in really bullish context. A little bit of a scare today on this big red candle, but immediately got bought back up. Now we're kind of seeing another red day start. So let's see how this plays out. There's still massive support right here at 42.5. And then take a look at the RSI, or sorry, the MACD. It is looking like it's getting bearish again. I said that when it was over here, and then all of a sudden it came, whoop, right straight back up into the air. So keep an eye on it. If it bearish crossover, the last time that happened, we did go through some consolidation before another breakout. So this could be taking place again, potentially. It could go down, consolidate, and then potentially see another breakout. It could break down. But keep in mind, like this has just been going straight up in a straight line, and everyone thinks it as just a one-way trade. Like you hop in, you make money. You hop in, you make money. It's the easiest thing to do. You just hop in and you make money. Be careful, because the party's end, and there's going to be people buying up in these ranges, and then the price takes a dip on them. Well, they'll buy at 100,000 and it'll drop to 75 on them, in a very quick moment. So you got to be very careful with how you're planning on investing. If you want to buy and hold, if you want to just trade it, there's so many different strategies out there. So just be mindful of just how volatile, obviously, it is. Then, holy moly, WTIC, oil. Jeez, can you consolidate for a little bit, please? Holy moly. It came down, and then just a massive green day, back up to 61.70, up 4%, and energy was leading the way. Energy has been the sector we've been talking about. We talked about it a while ago. I remember posting about it in October, saying this is going to be the sector. You can even look at do a Twitter advanced search and look at what I was saying about energy just being hammered at that specific time, and it looked like everyone. So this is good to note, okay? Because this is important psychology here. Everyone then was saying it was dead, and it's because of natural gas or natural resources or whatever, clean energy, right? So everyone was calling it, nope, gone for dead, down. And you could see strength coming into the chart via relative strength and these positive divergences taking place, which told me, like, okay, yeah, it's been going down and down, but we're starting to see strength accumulate into energy. And that there was when I started kind of saying, okay, we need to start looking for individual energy stocks, because when this thing starts actually moving forward, it could be amazing. And it has been quite amazing, quite powerful move. Now I'm talking about XLE and energy. This is WTIC, but this plays a role in its big move. Here's CRB index. Wow, holy moly. So once again, it's going to be a very interesting couple of days here with Jay Powell, because you can say that the 10-year right now, right, it's pricing in future inflation, or darn near people are like getting scared that there's going to be a lot of inflation almost, because that thing is moving like crazy. And then also, optimistic about growth. So it's all a double-sided sword. Let's talk more about that in the bond section. But CRB broke above 190, solid start to the week already, very frothy on the RSI. But guess what? If we get a weekly close above here, that resistance could turn into support. It didn't even act as resistance so far. So maybe this could be a false breakout and then we see it come down, but the trend is so strong right here. The RSI is just super frothy, and we just keep moving up. Like, this thing is just a powerhouse move. So very, very powerful. And that could be fueled because of the dollar dropped these last 3 days pretty significantly. And this day today clearly got rejected at the 20-period moving average. And we're coming back into the year, that dashed line, right? 89 point some change right there. It's coming into that. So if we get below that line, that means we're down on the year for the dollar. And I will say, so what's interesting here is the US dollar and the SPX have been having an inverse correlation. You could see that. Lower lows, higher lows. But as of recently, they've been a positive correlations, and up until today, they just went back to, they're slightly even correlation to negative, which is kind of interesting, because you saw the down day in the S&P 500, you saw the big down day here, so you think a big down day could help propel the market a little bit forward. However, I think that the eyes and the focus right now are on the 10-year. So we got to look at volume. We got to look at volatility. We got to look at currencies. There's a lot of moving parts here. So the best thing that we can do is just map out key levels and entry points, and not try to really guess, but to prepare for if something bad happens or if something great happens. Now, that's based off perspective. Like if the market falls down, that could be a good thing because you're short it. So think in terms of you got to be prepared if a good thing happens or if a bad thing happens. All right, hope that makes sense. Now let's look at bonds and yields. So this is what's interesting to me. So bonds, they just keep jacking up. So I don't know how this is going to act if the 10-year keeps going up to 1.4 or to 1.5, because we showed on yesterday's chart, the candlesticks, that it was moving into a massive area of resistance. So what happens if the 10-year just blows through this? I think that's not going to be a good sign for the markets at all, especially if it keeps this move and this steepening of curve taking place. Once again, we talked more about that in the last video. But you got to understand, they're relatively low rates still when you look back, but the debt load is significantly different. So you got to wonder, you got to question, if rates keep going up, when is debt going to matter? Because, if debt starts really mattering, what is the Fed going to be forced to raise interest rates? Are they going to raise interest rates tomorrow or the next day? I don't even see how that's really possible at this particular point in time, the Fed's fund rate. But, to maybe slow this steepening down, we will see what he does tomorrow to try to keep rates, at around 1.4. Or take a little breather here. I really couldn't tell you, but I can tell you that if this trajectory continues, that's not going to be good. All right, so it's really that simple. Now, what's interesting is it continued to move up, this big spike, but gold started seeing strength. So at what point are people going to realize that gold is a good inflation hedge? Now, maybe that whole Bitcoin argument about maybe it's taking some of gold's shine away, I don't know. I don't understand how people make the same, they're completely different. All right. They're completely different. I don't know why we group them together. If you like them both, just buy both. I don't understand. I just don't get why we go back and forth of which one's better. They're completely different. They're completely different. I mean, you can say, well, in terms of, what, I don't even know. It's just, One's a physical asset. One has to be mined from the ground. One is computer software and a code that has to be hashed or whatever the case is. So they're completely different. They're completely unique in their own specific way. But what I am saying is this big spike in the 10-year and the 30-year, if this continues to go, I mean, I would feel most comfortable with something that I know has been a hedge against inflation or, you know, a protector of wealth for thousands of years. It's been money for thousands of years. So I don't know. I could be wrong. You know, there's always that. But I feel most comfortable with that. And I like having a physical asset and even buying physical funds that hold the assets or even in vault or whatever. All right, so just to kind of wrap up the conclusion, like I said, tomorrow and the next day, going to be interesting days. Let's keep an eye on Jay Powell, see what he says, see what's going on, see what's going to be taking place in the 10-year, you know, kind of, you know, see what the big wigs, how the market is interpreting all this, you know, news that comes out from it. So it's going to be just interesting. We're going to map out some key levels. Keep in mind, my eyes, once again, are going to be here for the Qs because I feel like if the market completely, if something happens and the market completely rolls itself over, I don't think it's going to be long before the Fed tries to, you know, save everybody from it. So how high can this go? I'm not too sure, but what I'm planning for is stage one. If we do get into this range, I'm looking long the Qs, all right? I'm looking long the Qs, and what else did I show? Now I'm losing my mind. I'm losing my marbles. Losing my marbles. Oh yeah, I'm comparing it with the BP chart. Okay, if we get oversold here, if the VXN is starting to get into that area of resistance, and then you're taking a look at the Qs and you see a positive divergence building, I'm going in even though it looks pretty nasty. All right, that's just what I'm going to do. You know, that's my plan. All right, that's my plan. So that's all I got for you on today's episode. Hope you enjoyed. Smash that like, and I'll see you back tomorrow.